365, shake my hand and welcome. Good afternoon, good evening, wherever you are, 365 students across the world, YouTube family, and thank you for attending another Traders War Room where we look at the use of supply and demand, and I give you guys my take on what's going to happen in the following week in the markets. I will be looking at a couple of assets today: Pound USD, USD Swiss franc, USD CAD, EURJPY, NZDUSD, Pound CAD, Pound NZD, Palladium, Bitcoin, Ethereum, Copper, USDCAD, Platinum, Gold, and USDZAR. That's 15 assets. No time like the present to get into it. Shake my hand one more time and let's get started real quick, guys. As you can see, we've got 5 assets more than usual. That's number one. Number two, we are a little bit pressed with time today, so I will do my best to go through all 15. And because of that, market sentiment, markets fundamentals, what's going on in the markets, I won't cover that today. I have actually halfway through creating notes for you guys, so I'll be doing another pre-recording tonight. And it's important, please. It's going to be a video titled something about market conditions, right? Some things that you guys need to be aware of. I do believe we might get a rug pull from the Fed. I do believe this, and the logic behind it is sound. Like it's a rug pull that's not supposed to be too shocking, right? We understand how the Fed thinks. So we're going to look at our supply and demand today. We're going to look at our smart money concepts today. We're going to look at what I think is going to happen in these 15 assets that I have put out today. And then in tomorrow's video, first thing in the morning, I'll record it tonight. Please look at market conditions, what I believe is about happening in the markets. Those of you who are paying a lot of attention to the channel, you will note that I've already posted, by the way, our results for the previous week, right? So a War Room 63 that I did with you guys last week, Sunday. We had 1 loss, one big win. And I personally, through my own trading and the things that I share in our public Telegram group and on this particular channel, came strong due to 2 big sales on US 13 SP 500, right? And then the other trades that we discussed in War Room 63, we are waiting for those perfect levels to kind of like situate. But anyways, that particular video, if you want to watch that video, just click right up here, right, somewhere up here, and you'll see the results of last week. So today we're doing War Room 64, and because I don't want to waste too much time doing sentimental market analysis, I have a good video coming out for that. We can just do a quick clean bird's eye view, right? Euro is down, right? European markets close lower as hawkish Fed sends global stocks tumbling. Hawkish means, you know what they means, right? Interest rates have to go up, and the stock market has to fall, right? Weirdly enough, I'm interested in what's going to happen with the CAC and the French president and the elections and all that kind of stuff, right? Marco faces off against far-right rival. There we go, is what I'm talking about, right? So that's going to be a big thing that might actually influence a lot of European markets next week moving forward. I don't know if those of you who were with me in 2019 when we had the Boris trade, right? You saw how easy it is to make money if you kind of like understand what's going on. Sorry about that, excuse me, right? So there's not much going on here, right? Let's look at pre-markets. A little bit down, all right? American, Dow, S&P 500, NASDAQ falling, oil slightly above $100. That's actually impressive. Gold falling, right? Back to those 1930s, that number that I told you guys to be aware of. We had this number many weeks ago. We're back at it again, but we'll look at the charts. We'll be looking at platinum, palladium, and copper anyways today. We did gold, silver last week. All right, so if gold dips, right, all these babies follow it, right? And US markets on the close, our VIX is slowly climbing back to 30. Remember, I've taught on this, the fear gauge, the VIX index, we want it below 30, all right, not above 30, right? And then there's a lot of fear in the markets. And tomorrow's video talks to why, these numbers are starting to circulate the other way, right? The way that we actually don't want. Right, real quick. Ukraine war stuff still going on, so sad that that's lasted this long. This year, the world's richest men are fighting on Twitter, right? Elon Musk, a good Twitter video for you guys coming up. And that's got nothing to do with the Twitter trade, right? But how to think through generating trade ideas, especially in the stock and crypto space. Like how, when you read these news, what does it mean? Do you mean you just go buy? What should you buy? What should you sell? A very good video on that coming up soon on the channel. All right, US dollar breaks out as stocks break down, right? So that inverse correlation, we're going to have a look at that on the chart today. Stock market falls. So this is all on Friday, right? Nearly 3%, right? Fed, Mr. says, I did like to get at 2.5 basis point by end of year. You divide this by 6 to 7 meetings, you'll see, right? Rug pull is slowly but surely being priced in. It's different when markets price in a rug pull, and if Powell is actually going to deliver the rug pull, right? We know that Powell did say, I filmed it on this channel, Fed rate monitoring tool. We know that Powell did say, in the last one on the 16th of March or something like that, that he doesn't see a need to go above 0.25 up until at least inflation has peaked and starts to flatten, and he believes that will happen between June, July, August, right? So we're nowhere close to those times, but it feels like it, and there are a lot of things that have come together in the markets just before the next NFP. But if we come back to our favorite Fed monitoring tool page, which I have no idea. Okay, there we go. That looks better now. So we're 1 more week away from a big Fed decision, the FOMC on the 4th of May. And I'm going to do exactly like what I did last time. It's going to be live on our channel. I'll give you guys commentary. I'll tell you what this means, and we'll look at how it's playing out as it talks on those supply and demand levels, right? But look at this stuff. 100% of market, participants, large speculators, right, believe that on the 4th of May, the Fed is going to go 0.75 or even a full 1 point. This is wildly different from 0.25 per quarter basis point, right? So you can imagine a lot of fear has been priced into the markets. Remember, the more hawkish your Fed is, the more stocks have to fall, and that for you means your Nasdaqs, your SP 500, your US 30s are going to tumble, right? So we want to discuss these things in tomorrow's video, right? So in today's video, guys, I just want to spend as much time spreading my nets wide, because I believe I'm about to get into a very good trading season, right? Whenever they are fearful, there's a lot of volatility going on. So I want to make sure all my eyes on as many assets as possible, but I don't want to rob you guys of sound market education, right? So we'll be dealing with this, bit by bit. But in today's war room, let's see how far we can get with these assets. The war room shouldn't be as long as it is, because I've already done a review of last week's trades, right? We had another good trading week, in my humble opinion, just slightly less, financially impactful, right? So I didn't make as much money as I wanted, but that's fine. Like the whole point is not to lose, right? So look at the pound, man. Beautiful, taking out some demands, right? We can remove these levels out right now. What did I say to you guys 2 weeks ago, 3 weeks ago, 4 weeks ago, 5 weeks ago, 6 weeks ago, 7 weeks ago? No matter what your Forex gurus tell you, pound USD is going to follow the direction of Euro USD. And we did a good video assessing the weakness in Euro USD in many war rooms, but also recently when I did a video titled how to correctly use COT data, deep dive into Euro USD. Just look that up in the channel, right? And risk assets, pound USD, AUDUSD are going to follow. This is an annoying chart for me, because remember, inside this red zone on the 1 hour time frame was a supply that the markets reacted to. And the reason why some videos are being delayed on our channel is because I actually once recorded myself, right? And I was just showing the whiteboard the entire time, right? So it's actually crazy, right? So this is our first chart of the day. But just to remind you that this was a cowboy-ish area, because of how low it was on the time frames, did not give us the type of confluence we wanted. And therefore, someone like me felt like the need to wait for a deeper touch. And this is it. Sometimes on the channel, I'll make fun of cowboy levels and not take them, right? If I was still doing those London session morning live trades, this was it. It was marked up for this purpose on the Owanda platform, right? Remember, I was doing my, those of you to join me for my morning lives, and those will come back as soon as we release module 3, module 4, and all the students are onto the new system, and everything's working A-OK. All that stuff is eating up all my time, and it's important I focus on developing a perfect course. So module 1, module 2 are ready, and they take time to complete anyways. And on that note, we've got 6 days left. By the way, 6 days, guys. Please take this seriously. 6 days to get the 365 trading course, the entire supply and demand course at the cheapest it's ever been, will ever be, for $100 for all 4 modules, right? So please, 6 days later, we won't be able to help anyone outside of that. I think we've really done our best to use our anniversary, to honor it, in the right way, right? So please move on that. 6 days left. The links will be down below somewhere there, right? So this is that supply, clean. This is what you want, man. Beautiful imbalance, fresh touch, and markets have done nothing at all than just maintain a beautiful downward, fall. And depending on what kind of a trader you are, there surely there were multiple intraday levels that you could have gotten into. For swing trading, I was too stubborn, and now I'm sitting out in the dust holding. But maybe before we start breaking down charts, because I'll be doing this with you for the rest of the year, I think it's so important to work on your mindset, and you'll see this for yourself. So let's quickly do this together. I know it's weird. I know some of the things that I ask traders to do are weird, but I have created 109. We have one new senior trader, by the way, who joined us last week. We've now got 109 six-figure traders who have followed the 365 process. 109. I literally, believe you me, it is a long-term process. Sometimes you feel like you're never going to get out, but if you trust the process, you will grow. And a lot of this stuff is, a lot of these people, we had to stop with the trading and work on their minds. And I want to bring that old 2009 mindfulness version of the academy back. We can't lose the basics. So if you don't mind, before I go into pound USD, please continue. Say this out loud with me. Every day, in every way, I'm getting better and better as a trader. I say it every day in the morning. Say every day in the afternoon. Definitely say 2 or 3 times. Let it be the last thing you think about before you sleep. Now that part is important. Trust me, it's so important to program your subconscious mind. I could spend hours talking about that. And if you don't know the channel, and if you're just visiting for the first time, you might think this is a weird channel. You're here to talk about trades. You just want the signals. Signals won't do you any good if your mindset is not the type of mindset that can actually accumulate this information, produce good trading habits to sustain your trading portfolio. So every day in every way, I am getting better and better as a trader. I will slowly but surely. If you don't have your own affirmations as a trader, you will have mine. All right, it's nicer for you to develop yours, but if I'm not entirely sure how many people are doing it, I'm going to force you to do it in these small things because I care. So one more time, every day, in every way, I'm getting better and better as a trader. Because of that, I am so happy and grateful. We've spoken about gratitude in the 365 Money podcast. You have to zenfully center yourself in gratitude. If you want to beat the odds, something called the law of polarity in the universe, you must, through hard times, through blowing accounts, through constant losses, through hopping on, or because you've got a bad habit of changing strategies, changing senseis, mentors, gurus, refusing to follow rules, whatever your bad habits are, at some point in time, you gotta balance it out with something. And the simplest thing is to be grateful for where you are in your life. So every day in every way, I'm getting better and better as a trader. And because of that, because I'm getting better and better, I am so happy and grateful that money is coming to me, increasing frequent quantities on a continuous basis. Leroy, I don't see that happening right now in my life. It's okay. Program it. Become that person who is grateful. Become that person who every day, in every way, is getting better and better, and allow money to come to you. Become attractive for money, man. Right, so getting that out of the way, moving on. But this is not to say what we just did is not important, so that we have to move on. It's more important than the signals. Please get that stuff right. Get that mindset right. Right, so we've got pound USD, folks, and it's falling. It's falling like we said it would. It needs to fall. There is no other way. That is what supply and demand told us months ago, weeks ago. And so we followed this thing carefully in a slow downward trend. Right, so now it's time for us to really polish up our areas of value. I've long left this zone, cared for properly, right? So I'm going to go at Kinihashi just to see. So I'm assuming this is that March recovery. That's a disgustingly long wick. right? And I'm just going to go with basics, our module 1 basics. A lot of people think there's order blocks and supply and demand, and they don't understand there are very different types of supply and demand levels, and they give birth to very different types of areas of values, and those areas of values come with very different types of rules. So if you're trading order blocks because you saw them on YouTube, or you see me rushing through war rooms and you don't understand the actual market theory behind that, your win rate is going to be hit and miss. Take the course, 75% off. I cannot emphasize this because it's really something I'm never going to come back to, in a very long time, with the things that we need to do as an academy, right? We really need to start growing. Like, it's nice to grow senior numbers, but we want to grow quality traders, right? So we've got something that looks like G1. What's G1? Governing demand number 1. This is the governing demand number 1, and believe you me, this is the 3 months demand level on this chart. Euro USD right now is eating its way through, a monthly demand, right, making its way down to the 3 months demand that was always there. But what kind of an asset is this? This is a sell profile asset. Sell profile asset. We are about to enter into a recession. Sell profile asset. We're about to enter into disastrous market crashes, something bigger than 2008. Sell profile asset. This asset tells you what it looks like on specific times. Banks think in 3 months, take profit in a year, in a 10-year plan. If you've been on the channel for at least 3 weeks, you'd have heard me say that over and over and again. And this is very important to kind of like start to think through these things. Will Euro USD even sit at that 3-month demand if we enter into a recession? Or will it follow its profile? We do profiling in week 2 of the course. If you can't profile your asset, you have no business trading it. If you don't understand its habits based on market sentiments, then you have no idea which supply and demand levels to look at. Like trading like a bank or with the banks is a very complicated process of knowing when to move and how they move, versus trading like a retail trader who simply relies on technical analysis based on a strategy that offers a 30% win rate. Right, and this is not the time to debate this. Right, so markets are falling from what we've drawn. So we've got a very big governing demand area here, very big if you use normal candlesticks. Okay, that's number 1. And if you really look carefully, it's made out of this bullish engulfing pattern on the weekly. So I'm just going to reduce it now. What am I doing? I'm doing my multiple time frame analysis, top-down analysis, breaking the big to make it small and manageable to understand what's going on. And then here I've got W3, right? So W3 plus 1. Plus 1 means it was sitting on top of GD1. It was sitting on top of the governing demand, right? So what I'm saying here is there's a lot of buy pressure here. It could be explosive. W3 is weekly demand number 3. Where's 1 and 2, Leroy? They're broken. We broke these levels. We've been breaking them bit by bit. So when I have these notes, when I teach this coding to you later on in the course, you'll see it many times. It's imperative to know this, because the weaker your chart becomes, the more direction you see. On the weekly time frame, before I can move forward, it's important to honor the fact that this week left us with a potential new area of value. I say area of value right now, right? Later on, you might hear me saying supply. It always starts off as an area of value. It becomes a supply when it meets very specific rules. All right, becomes a supply when it meets specific rules. For now, it's an area of value, an area of interest. I don't like this one. This is not a bearish engulfing pattern, not in my books. Not in my books, right? Look at where the green candle closes. Green candles open at the bottom, close at the top. This red candle opened, just slightly below, right? So it's not the typical module 2 setup, but I'm going to mark it as an area of interest for now. I'm even better off doing something like this if I really wanted to be safe. And then claiming complicated 365 candles and a drop. And now we're waiting for a valid imbalance, but that imbalance right now is a bit dicey, right? It's not the typical imbalance that shows us the type of volume we want to see to allow us to make a decision. But nonetheless, let's mark this as an area of interest for now, because it's significantly quite strong, right? And then we have to talk about some basic things. If we were to clone this, those of you who don't understand risk to reward ratio, you need to ask yourself some questions, right? What kind of a trader do I want to be in life? Do I want to be the type of trader who risks $1 to make $1? That doesn't sound great, because if I lose $1, if I'm wrong on that trade, I lose everything. You want to be a type of a trader who risks $1 to make 50 cents. That sounds stupid, right? The first option didn't sound great. The second one is just dumb. Why would you risk $1 to make 50 cents? That means every time you're wrong, you actually lose so much more than you could even possibly gain. We call this risk to reward. A risk to reward is simply what I'm doing right now. I mean, this is the craziest, oldest way to do it, but you just want to measure, see for yourself how big the area of value is, area of interest, where you are going to make your attack compared to where you might need to take profit. Right, a better tool for that is you just come here to the short position and you just draw. You just want to see, all right, so what's my risk reward like? Let's say markets couldn't go any lower and all markets could do was to stop where I've highlighted that as a demand. This is almost 1,6. It's almost slightly under 1:2. Is that a good trade? For some traders it is, right? For me and my students, we prefer 1:3. Every time I risk $1, I better be making 3. On the days I lose, because of the many 3s I made when I was risking just 1, I get to cover my loss. It's an old, simple, simplified risk management thing, where $100 you're only risking $5 and you've got 20 trades to make at least 15 per trade. It's simple maths. If you think about it, if you're trading clusters and you're focused, you can actually grow your money. All right, so we've got an area of interest. Excuse me, I'm getting too excited, and a very poor risk to reward here, all right? Something to be mindful of, but you're not gonna take a trade from the weekly. That means your entry point might be even in here, which means you might actually get a decent risk to reward, but you're only gonna know this through multiple time frame analysis. By the way, this is the only chart where I'm gonna take so much time and detail into explaining things because of how behind in time we are. You would not believe how I'm very scared that I will not be able to upload this on time. If you ever noticed, today, unfortunately, I'm not with you live, but I'm recording this and it's already 3:30. I know you guys are going to be trying to watch it an hour from now. So I have to record, upload, and make sure it's ready by then. So I'm going to have to fly very soon. Right, so this is the area of interest. This is what it looks like on the daily time frame. Immediately, knowing me, I want to look to the left. I want to see what my daily first demands look like, because that's important. Remember, this whole green zone was marking out a weekly demand. So now I want to start inside my areas of value, start to minimize stuff. And I'm going to go Akinihashi just to get the full sense of area of competition. Akinihashi shows us volume-based candlesticks, which is actually an incredible read of where things are. I'm going to aim for the doji candle, even though that might be a little bit off the top, but that's going to help. And then immediately make this green. And because of time, I don't have time to be, clean and neat. And by the way, let me know how you're doing. How's your trading this past week? Literally comment down below. What are you struggling with in trading? I'm making notes. Mr. Sia left a nice question for me in a previous video. I've made notes of it. So now I've got a video idea to make for him, COT reporting part 2. Right, so let me know what's bothering you. Let me know what you need help with, what topics you want to be covered. I promise you I'll take it very seriously. All right, so we've got this good area here on the daily. I'm just gonna make it a little bit lighter. I'm gonna make the boundary white so we can see the difference, right? So, and that's where I'm expecting all hell to break loose if there are any type of buyers. And then we've got this other area at the top here that created a value-based demand, and markets rallied all the way, and price kind of like, did not come back to make a fresh touch. And because of that, I now have 2 daily, areas of value. I like buying low, so I'm going to delete this, even though I acknowledge that it's there. It's just that I'm not a buyer. All right, I'm not a buyer on pound USD, so I don't really care about buyers. I care only to the extent of knowing where to get out, where to take profit. Right, so I've got a daily demand inside a weekly demand, and it looks something like this. And if I was brave, I would remove the weekly, and this is what I'll be left with. I'll be left with this. A daily demand, something like that. So that's what I'm going to leave on my charts in there. And then I'm just going to make a slight note to say daily demand. Why daily? Because if you're beginning to swing, you want daily demand to daily supply. And you want that to also give you a good win risk to reward ratio of 1:3. But we still don't have an actual entry point for a supply. So then now I'm looking at pound USD. I'm seeing you remember there was that 1 hour supply somewhere there, and then markets actually dropped and left. So this whole drop here is an area of interest for me. And then when markets dropped and left that area there, we don't know yet if it created a supply. We do know that markets came back. You see this one touch on that green candle right there? That's markets coming back, okay? Markets came back into the zone, right? Signifying, you know, something is cooking, right? Something very significant is cooking. If you look at the way we do our imbalance rules in our module 1, you'll see that the, you know, imbalance rule was met. Therefore, this was a valid drop, right, in price. A very, very, very valid drop in price. And so so it's not surprising that markets then continue to fall for about what looks like another week or so, give or take. I could be wrong, excuse me, right? And so that kept going. So now we want to know, will price come back there? And if it does, what would be the reason for that? Or will markets come back somewhere? So for clarity, I'm going to remove that real quick in front of you there. Right, so this is could be a peak supply, but I think it's more complicated. 365 candlesticks, because it's a pattern, it's a PCP pattern continuing a downtrend, right? And markets have come back once, and you really want to keep your PCPs clean. You want only one touch, to be honest with you, right? Unlike conventional supply and support and resistance traders who want markets to come back. I'm going to remove the extended right thing. It's starting to annoy me right now. We don't need that right now. Right, and then we had this small moment here in price where markets tried to go back all the way up there and instead failed, and then markets came back to retest this, and this is how price closed on Friday. I'm going to go to normal candlesticks and start to get a read on the charts of what this really looks like. Right, so in front of me, we've got a very strong bullish engulfing pattern, and then markets sell against that. I'm going to tighten that area of value. I'm literally only working through pound USD. I'm not coming back to this level. We can do all the fancy other stuff, man, change of character, BOS, breaking of market structure, all that kind of stuff. I mean, I see traders these days love decorating their charts, which is good, right? If you've got a working theory in price, as long as it's making money for you and it's clean, right? So now I've got these two areas. You know me, I like my supplies yellow. Green means buy, yellow means sell. Red means cowboy. Cowboy means high risk area. I probably won't take the trade with you. All right, so in case you ever get confused, that's what's going on. So I need all these areas of value correct so that when markets come and I decide to put a pin in order, I'm there. Right, so honestly, it should have been in this trade on Thursday. I'm not in it, but we should have been. If we're paying attention, clean imbalance, 1, 2, 3, 4, price comes back, triggers us, we should have dropped. This is the area of value we wanted to be in. So right now, on the daily time frame, we are too late, right? On H4 chart, this will now need a miracle. I repeat, this will need a miracle, and it's going to be very difficult to trust. But this is a very good thing to wait for. Something like that on the H4 time frame. But unfortunately, it doesn't always work out that way, because what we really wanted to catch was the higher sell on the daily, which we missed. So I'm marking this red. This is a red area, high risk, expect to be liquidated. Expect it, take the trade based on what you know about the markets and what you trust is true about the markets. Inside this daily area of value, lies potentially, unfilled orders, but you can see with the imbalance as well, it's not really the best. You get only one. Yes, no, it's not really the best, right? And why did price stop there? So I'm just going to investigate real quick. Also not clean. It's not clear why markets just kind of like started falling right there, right? But markets did break this, structure, however you want to draw it. Markets did fall from there. And now this is what it looks like on the 1 hour, right? So I'll take a risk here. It's a high risk trade setup, all right? I repeat, this is a very high risk trade setup. I'll take it. I'll use 3 entries, trade wisely, very small, pip allocation. If this works out for you, just remember what I said. Your first entry really should make up for what you're risking, and 1:3. The second entry should always target the next logical place for price to stop if markets were to turn to go back there, which again, this is offering you at least 1:5. There's no risk to reward. I mean, this is really good. This is quite a tight area of value. I would be generous with my stop loss just to cover some stuff right there. Let's see if I'm generous. What is this? right? So this is almost 1:4, all right? So it's not bad at all. And then entry number 4, entry number 3, sorry, you break even and you try and swing it all the way down there, right? And really get your money's worth if this area is to hold. But like I said, it's not really the best because I really would have wanted to be already in the sell. Had I been paying attention to pound USD, that's where I should have entered, right? With you, if we're covering. And you will notice my language is starting to change a little bit, right? I feel like markets are in a rush to fall. So I'm no longer waiting for these very higher supply areas. I mean, if they do come, better, all right? If I get stopped out here, but price is gonna fall somewhere up here, even better. I'm happy to come back next week, reconfigure the plan and go. As long as I'm not losing at the rate of my wins. As long as my wins outpace my losses, I can handle small losses along the way. And that's your trading. Your trading should always focus on downside more, right? So USD Swiss franc is the next chart, guys. And, believe you me, I've worked through a chart right now in front of you. Now I'm just gonna, keep quiet a little bit, right? So we spoke about how we sold here. I don't know if you guys remember. And then I put an X to tell you that this is not going to work, right? This is not going to sell again. Don't bother selling again. If you look at the dollar, if you look at all my war rooms are pre-recorded, right? Now I even put chapters in there so you can find it for yourself, right? But I think it's time now. We've made our point to kind of clear the chart so that I don't have to keep explaining the same thing over and over. It was a very good trade idea, and now it's over. So now we need to reassess USD Swiss franc, because this thing, the dollar, guys, let's look at the dollar DXY real quick. Right, so we've spoken about the dollar, right? Uptrend still intact, broken, another beautiful daily supply, well done, dollar. I wanted to make a Facebook post about this, but life happened, right? Now it's beautiful. Now we're coming back to the Donald Trump supply. We really are now in that Donald Trump zone. Donald Trump supply basically was a supply that started his presidency. Democrats, generally speaking, all Democratic or most Democratic presidents during the appointment of the election always take off from demands in the charts. But Republicans, for some reason, always take off from the points of supply. And if you check the dates, when price got to the supply in a quick turn, that's when Trump was elected in January 2017. And now markets are back at that supply. It was the same supply where price fell in COVID of 2020. Now markets are back at that supply, whereas risk assets are now at the March 2020 demands where prices exploded during COVID. So some assets fell and some assets went up, and we're about to see a rotation, maybe a triggered crisis, but something is about to change, right? So we've got this incredible, beautiful parabolic structure. We've been chopping up the demands inside the DXY together, family, like it's really been a beautiful asset to buy. No zero selling, but just really just buy. And markets finally made a kiss onto this particular supply. And the reality is we're expecting a sell-off, but how serious would be the sell-off, right? How serious would be the sell-off given everything that we know about DXY so far? In terms of, where I am, I haven't changed my mind. I haven't been able to find a long-term swing trade entry. I've been clear about that. And I'm going to have to add some DXY analysis here onto the timestamps. But I haven't found one. And that's because, I got in on the 16th of June and got out, a little bit earlier this year towards the end of February. A beautiful positional trade, of course, like most of you who were with me before would have known. Let me just remove these old buy trades in here. Excuse me. And the honest truth is, if I am to buy the dollar, I would really want price to come back all the way down there for me, somewhere there. If I am to buy the dollar, this is the first place where I really feel a little bit safe. Just after that consolidation, where markets kind of like stayed in this range from the 7th of March, 2022, all the way to about the 31st of March, 2022. And if you know, March in the markets has been a very big, important month in the market since COVID. If you don't know, then you're not paying attention to the channel, which means you haven't subscribed yet. So do so right now so that these obvious market truths are part of everyday life. But March has been big. So instead of falling, the dollar consolidated. And we've got a value-based demand right there, right? A drop-based rally, clean, sweet, cute. It's the first time I'll try and buy to hold, right? And then we'll see if we can open the roof right? We can open the roof, then you know that democratic power is playing, right? Obama's demands did break some supplies, and we see how far this baby goes, right? And this is really, I mean, I don't know if it's going to happen. I mean, we've got about what, a week left, right? 3rd of May, sorry, that's when FOMC speaks, right? If that man rug pulls the market and we go 0.50, 0.75, or even 1 basis point, the dollar is gone. It's gone. It is gone. Interest rates strengthen the currency and weaken equities, weaken risk on assets, right? So it's something to be mindful of, right? My swing trade idea is good, but it's safe, but it might take forever to get triggered, because this asset keeps going up and up. Like, so what you want to do is you want to back test and find a fresh demand that is not yet filled, but is valid, right? This might not qualify. This to me feels like area of competition was observed without us, right? Feels like area of competition was reserved without us, but I'm going to put some money at this level and we're going to see what's going to go down. I am going to put some money at this level and I'm going to see what's going to go down. But I'm marking it red because it's not really how I like to trade. I like to trade with some confluence from the daily. But all these small red zones that I'm marking are very good places to make some quick money on the dollar, right? On the dollar index, right? Something like that is possible, or even that, right? I'm not saying in this order that it will bounce, then come back down. I'm saying one of these red levels is going to hold a buy, at least for a short swing, 3, 4, 5, 6, 7 days. And it's something to watch out for. I would advise against buying here. It definitely could work, but I would definitely advise. I wouldn't do it. I wouldn't do it. That's just obvious bait. You know, there's a lower demand down below, so why not wait for it? We don't have a bullish engulfing pattern here, therefore we don't even have a clean imbalance, by the way. You know, so even this one is a high risk. These are very high risk areas. But once again, it's just that logic to say to you that we've got about 7 to 8 days left before the FOMC comes on stage and tells us that this is what he feels about the market. If you watch my video tomorrow, you will understand why I'm a bit worried, right? Why I think markets might get rug pulled. But if you can see on these red zones in the market, there is no confluence until all the way down there, right? So I will definitely have a very big lot size waiting for me down there. But I'm happy to kind of like risk a little bit of money, you know, as price goes down. But I'll be watching this chart like a hawk. I'll be watching market sentiment like a hawk this coming week. I am on sabbatical. Oh, by the way, guys, I said this before a couple of times. I said it in the private group. I said it in the public Telegram group. I'm on sabbatical for the month of April, right? So what sabbatical means is I'm not here. I'm not unavailable. I am in the background working on my course, rebuilding the course, right? Module 1, Module 2 is already out. It's like almost 30 something lectures, 2 hours each on all the rules of supply and demand. It keeps you busy for about 8 weeks. What's already out there that you can gain access to right now for $100. And I'm also then building my module 3 and preparing myself for live classes on trading psychology, right? So if you WhatsApp me and I don't respond, you know, I am on sabbatical. I have said this, right? But I don't mind responding, as long as you don't mind receiving a late response from me. Because when I go all in my research hub or preparing hub, I go offline. I'm not a person who likes to be on the phone and all that kind of stuff, but I've got a team. So if you've got a problem, just email my team. Email the same people you registered through. If you want to be in the private Telegram group, they will sort you out. I promise you. Okay. Thank you for understanding, right? But yeah, I did see someone who was trying to reach me, and I'll sort them out straight after this. So that's DXY, so keep that in mind. So if the dollar is strong, what does this mean for US dollar pairs? That's how we got here. So US dollar Swiss franc is our next chart, and we had the perfect sale, which was great, praise God. But now that supply is broken, that trade idea is long gone, time to move on. But I think it is best to move on sharp, right? So, you know, USD Swiss franc is just cracking on suppliers. And, you know, when I see charts like this after being inside a good trade and then getting out later on, I don't want to lie to you guys. Generally speaking, I'm annoyed with myself. I'm annoyed that I could have swung longer. I'm annoyed that I could still be in the money, right? So I took a good sell, but that's because we closed our buys a long time ago. But it's the buys long term that are actually now doing very well, right? So on a governing time frame, you know, USD Swiss franc still has a little bit more upside to go through, although markets are quite close to, you know, a halfway supply, halfway because on the other side of a trend line. Therefore, we don't expect the, you know, the punch to hold. We don't expect a lot of sell power to hold here. Markets made contact with this supply here. Markets are going to react accordingly to this supply here, but we know that on the lower levels to get here, markets broke a lot of supplies as well, broke a daily supply, broke a couple of weekly supplies to get all the way up here. And now markets need to deal with that. I apologize for the mess on the charts, all the words and all that kind of stuff. I will make it clear for you. Right, so what don't we need anymore? So we don't need the term daily supply here. We've already traded that, we've traded that, we've traded that, we've traded that. We don't need that as well, we've traded that. Right, just want to make this chart nice and clean so we can all see stuff together. Right, so we did have this, which I think is something that we missed out on, right? A nice bullish engulfment structure that markets sell back into. That's the whole point of selling, because remember, when we look at these things, some order blocks have specific requirements of how many times they can get retested. And a bullish engulfment pattern, for it to really do its job, markets always come back to it, always come back to it. If it's in the right trend, right place, when it's the correct supply or demand level, markets come back, number one. Number two, we like it because it's strong. What do you mean it's strong, Leroy? It took out an opposing area of value because of you, Mr. Bullish engulfing pattern. You took out a bearish engulfing pattern. You took out an opposing supply as a demand. You can see markets leave the area, come back into the area, the buyers gain strength, and they take out a daily, weekly supply. That's powerful, right? So it's a very good bias. Once again, another reason of why I should be in there, why I should still be in there. I'm so sad. I am out of time. It's already 4 o'clock and I haven't even started to edit this video. I'm so sad. I don't know what to do, guys. All right, let's keep going. I apologize. Right, so USD Swiss franc, we are looking for some type of buy. I think I should ask for time in the public Telegram group. I'm so sorry to do this on the video. Good day, guys. Sorry, guys, for doing this in the video, running late. Please, can we meet up at 17:30 p.m.? For the war room. It's just the only way, because I don't want my personal life to interfere with other people's trading, right? So today's is a big deal for me and my family, so I won't be able to do the war room live. All right, so thank you for understanding. It's just that I was very much panicking at some point, right? So we've got USD Swiss franc on the daily, okay, and I'm looking for buys. That's literally what I'm trying to tell you. I'm looking for buys. Why does this chart now look different? The weekly demand, right? So this was a weekly demand. Markets came to this weekly demand, went all the way down there. I'm pretty sure you're going to find a daily demand contact. You'll see for yourselves, and then markets left. But when markets left, let's pay attention now. When markets left, they created a new area of value, and that's the only place we can wait. In my humble opinion, that's where I'll be waiting. I'll be waiting because my bullish bias on this chart is not yet over, and I understand where markets are. Markets now are kind of like dealing with, the higher supplies right now, right? And these higher supplies could be impactful, but I'm pretty sure price wants to get somewhere up here. Why wouldn't it, right? Why? There's a whole lot of sell orders up there. All right, and let's just mitigate this level. Oh, okay, it gets even better. Right? So I'm looking for unfilled orders on this chart. That's all I care about right now. It gets even better. All right, this is the first one that I can see. Right? So markets could even come up here. They've never been in a long time. Right, so because of that, I now know where to go for my bias in terms of buying, right? So there's this area up there that needs to be dealt with. You can see markets previously tried to arrive at these highs. So we want to also make sure that we have drawn the area of competition correctly, right? That there isn't a low-hanging tree, in price and then prices, and that this could be the area of competition. That little wick there could be the problem. Okay, there we go. All right, there we go. Fantastic, right? So that could be the problem right there. That little wick right there could be the problem. Right, so let's see, right? And if you look, if you draw the area of competition correctly, your entire supply and demand changes, right? Look at this. Markets have been here immediately. Like, if you just take the time, like, to trust your instincts. So once again, I'm gonna go shopping. So now I end up finding a peak supply on the weekly time frame. First, I thought I found the freshest supply. Because I'm doing this in a rush, I need to be careful. And then I realized, this is not the freshest supply. This is a good supply. It did break market structure, but it's from a fall, and it's from this type of fall here. So markets were reacting to all the stuff on the left, right? So there's this whole world slightly up there on USD Swiss franc. Why is this important? Because price could really come back here. It really could, right? So this is how I'm seeing this level, right? Markets dropped on the weekly, went in for a fresh touch, right? Then markets reacted. There's a bearish engulfing pattern right there. You can see it. If you can't see it, I'll zoom in for you. This is the job, guys. This is the job. You got to pay attention to detail. This is the job. You want to make money? Shut. But this is the job. You got to do the job to make the money. Right, clean bearish engulfing pattern, right? Making contact there, draining some sell orders, coming back for a fresh touch. Those of you who have done my course, you know how this works. It's very important. You know different areas of values create different types of supply and demands, and those have different rules. I bring this up because once in a while, my algorithm will annoy me and show me a post of someone who's not in my academy, just a stranger, saying order blocks, smart money concepts don't work. Like, people say such things all the time. And it's like, okay, then how do you explain 86%, 85%, 92% win rates? How? And I'm not a lifestyle trader. So I have nothing to gain, nothing to lose. I'm simply saying that the answers are there. You know, sometimes if you take the time to master the craft, right? So I'm pulling these things over, but now I know none of them are fresh. None of them are fresh. And now to look at validity of the areas of values, the order flows, order blocks, all that cool stuff in there. And maybe we can talk about that in the next video that will follow up this war room because of time. I've just bought myself barely an hour in the public Telegram group, right? So we've got all these weekly supplies now that we've drawn. Let's see what they look like on the governing chart. But on the governing chart, we've got no confluence up there when markets stopped here. So we probably market stopped on a fib level. Do you guys understand what I mean by fib level? Anyways, I'll draw a bearish Fibonacci all the way down. Make sure I get it right. I wanna know why markets just stopped there. I can't see a confluence, right? So this is the golden ratio area. You see that? You guys see that? This is 61.8 at 365. We love that. We love this number when it comes to our supply and demands, and markets stop there. So the weekly supplies together with the governing Fibonacci golden ratio area were enough to make sure this was a perfect retracement area for markets to keep selling, right? Even though there was no confluence there, right? So there's no confluence on the first supplies, and then there's a little bit of confluence here, all the way up here. If I draw this whole governing supply carefully, you see this is what I've done now, big bearish engulfing candle. I've swallowed those two higher weekly supplies, and there's the nice big fresh touch to it there. So this is all in here, but it means nothing now, in my humble opinion. For looking at governor to governor, what's going on governor to governor, this yellow zone here means nothing, right? I'm going to remove my Fibonacci. We don't need it. Right, this is not sitting too well with me. And the only thing that's going to slow down price for now is this bearish engulfing pattern right here, sitting just above the red zone. All right, so that's why, once again, because of all this hard work, right, understanding the weekly, the supply, and all the needs of the market, I really think I should be a buyer long-term in this market, long-term. And on the governing time frame, do we have such a signal? Because I know on the weekly we found a demand, right? In the governing time frame, we have a bullish engulfing pattern, and then markets came to test it, then markets based, and then markets rallied. Rally filling up the weak market inefficiencies. I've taught you guys this before. I'm gonna go Akini Hashi on the monthly time frame. It almost looks like markets were basically trading sideways here and finally exploding to the upside. Right, so, and then look in Akinihashi, by the way, on the governing time frame, we do have an order block, right? Clean imbalance, right? So this is valid, right? This red zone might look high risk, but it's kind of invalid. So wait for a nice, fresh, good, healthy pullback from that zone in price, and then let markets come to you. And so I still maintain buying here. I'm going to delete the old one. Now I'm going to leave it in because it's part of the analysis, but basically I maintain buying here in the weekly, week 1, right? Bearing in mind that markets, when they come down here, might come down very heavy, all right, very violently, because this is a valid sell, at least according to Akinihashi. And then according to a drop-off market, you know, drop-down analysis, and then I go Akinihashi one more time just to make sure I see what I need to see inside weekly buy, which is this zone here. I'm going to make that white. There we go. On the daily time frame, I'm going to drop this a little bit. I'm going to go normal candlesticks just to get clarity. Yeah, I'm probably going to try and buy somewhere here. Me personally, I'm going to be looking out for this area. I don't like the fact that, you know, my stop loss is going to be inside a lower demand, right? That's just a reason to be stopped out. And you're not going to like how big this area of value is. I understand that, right? As a swing trader, as long as I hold on long enough. All right, look, man, it's not even as big. It's the average size. Like it's a normal area of value. So this is what I'm looking at. You can see where my stop loss is. And then you can screen lower. You can go as low as you want on H4 time frame, maybe to get a better risk to reward ratio. But you can see with my entry point, I'm sitting right on top of this, bullish engulfing candle on the H4 that is fresh. So I am 1000% happy about my analysis for myself here. USD Swiss franc in the bag, right? Let's not waste time. Got amazing people waiting to get this at 5:30 now. Right, so we got USDCAD, beautiful, beautiful. Yo, I won't even lie. I started to panic a little, just a little bit. Started to panic a little bit when markets kind of like when we spoke about this trade last week, by the way, we spoke about the win, we spoke about the analysis in the previous forum, and then markets kind of like beautifully recovered, right? So it depends on who you are as a trader. Are you in this with me down here? Or are you waiting to enter again, right? So it's a whole different ballgame, because right now we're doing quite well. And by the way, full transparency, I'd already broken even, just in case. And I'm glad I did not close, right? So there was some type of a supply here to slow things down. You can see for yourself somewhere in there, right? There was a supply somewhere here, but then that supply did its job for as long as it could on the daily time frame, or this is actually the H4 time frame, did its job for as long as it could, and markets actually, went all the way down, but now broke it, and we're going, right? Once again, guys, dollar is strong, right? So you really find me having chart setups of me selling USD something. I don't have anything actually to selling USD anything, right? I believe in the US dollar thesis. There was a beautiful trade we took based off, I think, the 2 hour, 1 hour, those of you remember. If I go to the 2 hour time frame chart, you'll see right there, boom, a clean entry. I'm going to delete that because we've taken the trade. It's made us good money. We exited somewhere here. And I told you guys last week, I wish I'd held all the way to my buy entry, but that's fine. Right, so markets are about to approach that zone. And to me, just a heads up, this is a PCP. It's a specific type of supply and demand, basically, that does not scream strength. And what that means is I don't expect price to fall again. Right? Okay, fine. Maybe I do because it's a bearish engulfing pattern. Maybe I thought it was a PCP. All right. So if you're brave, you could try and sell here, but I wouldn't recommend it. But if you do sell, just be very mindful of where you're planning on getting out. That's what I can tell you. Like right now, if you do sell, just be mindful of where you're planning on getting out. If you're lucky with your sell, you might get something like this. Please note, I will not be with you in that sell. But if you do sell, this is a good place to take profit just before that, right? Those of you who are not in the trade, if there is any selling this week on USD CAD, then you want to wait somewhere here for a potential buy. It's not the best setup. I'm going to leave it in red. There's a cowboy red. The reason for that, folks, is because buy low, sell high. This is not the lowest place you could buy. You know, markets might actually come back all the way down here again. Markets are very tidy, right? So there's some areas of value that are dominating, that are more valid. There's a value-based demand is always better than a momentum buy. The one in red is a momentum buy. Down there is a reset buy. It's a reset, not reset. Reset. It resets the market. It's a value-based demand. That's where price really should get, you know, a massive boost, right? So I'm just moving that out of the way for you. I'm going to make this a Kinashi. Yeah, you know, I really do stand by my bias there, but let's see if there's confluence on the daily. Okay, not clean on the daily, right? Just a reaction to the zone there. Okay, so you know, trade lightly, right? For me, this area of value represents a chance to, I don't know what's going on with my camera there. I do apologize, but this area of value represents a chance for me to maybe potentially then gain a little bit more exposure to the markets, right? So potentially, in many ways, kind of like move in on another position. So to start to build my swings, right? So if markets are to come here, because I've broken down there, I could either close when markets get there in terms of profits and have another swing going here, right? So I don't lose out on all the money, but that's going to depend on me as a trader, right? It's going to be a trader's advantage, but that would be a good place to kind of like get some type of insight on what exactly is going on, right? So I don't know what's going on with my camera. So I'm just going to switch it off if that's okay with you guys. There we go. I apologize for that. But we're not going to let the good work stop, right? So back to the charts, right? So that's what's USDCAD, right? Next, EURJPY. Oh man, what a beautiful chart for the first financial quarter. You know, in the sell, you know, beautiful sell during the first financial quarter of the year. You know, we've been chopping it up, and then I missed this buy in those morning sessions, and then yeah, life hasn't been fair ever since, right? Markets haven't been nice to me to come back to me and allow me to actually buy, right? And I am working slowly but surely on that particular process on at least being able to buy something, you know, buy low on the EURJPY chart. I apologize. As I'm talking to you guys, believe it, I am working on sorting out my camera. I'm not entirely sure what happened, but I think we can bring it back. I think we'll be fine. Right, so this is where we are with the EURJPY chart, right? Markets have really had, you know, an incredible run. Absolutely incredible run with or without us. Hey, I'm back. Shake my hand. Right, and we want a safe entry. I can't emphasize this, but let's do a top-down analysis because that's absolutely important. Knowing where to begin is very important, right? So on the governing time frame, we call these governing time frames. We're new to the channel, by the way, because they literally govern the trend, right? So if the supply and demand analysis is completely unaware of top-down analysis, is it really supply and demand? I don't know. Right, so we've got this whole situation here. Markets are going to clear these levels, in my humble opinion. We've got what I've taught on the channel many times, monetary policy divergence, right? Look at this, aggressive euro, right? You know, like in terms of interest. Didn't we read something about the euro? I mean, I could be tripping, but I feel like my mind was reaffirmed again today that euro is going to take like an aggressive approach, or euro hawks or something. Did you see something like that? Newsweek week ahead, Eurozone, Aussie inflation, ECB monetary policy pressured by two strong opposing economic forces. I'm pretty sure I saw something. Huge week for earnings. Dollar breaks out, stock market falls. Fed master says, okay, market has changed. It is no longer about inflation, it's about growth. I don't know. I don't know if I agree. I think it's a bit of both. Always has been a bit of both. Yellen worth considering steps to lower US tariffs on Chinese goods to lower inflation. So too late for that. European major indices closed down sharply by the day. Yellen says US economy is being very resilient in face of set shocks. I'm sure you believe that. Bank of England, we will only do a QT in stable markets. We'll see if conditions change, right? Qualitative technique stuff, right? Maybe good, maybe bad, I don't know. Japan economy, more resilient to commodity prices versus in 2008. No hint of tighter monetary policy from the Bank of Japan, which means, okay, so this is important, BOJ. This means that if they're not going to tighten, they're not going to increase the interest rate, which means JPY pairs are going to keep falling, they're going to keep weakening, which means something like EURJPY is going to keep going up. So we keep looking for demands on those charts. We keep looking for demands on those charts. But I'm looking for something. The risk, there is a risk of a second round effect. Okay, that's not what I'm looking for. I thought I saw something. All right, well, we'll move on. Maybe I saw it on a different headline, maybe it's in my head. But anyway, Euro has been very dead set on continuously, tightening their monetary policy, insisting on a very strong Euro. You can imagine with the war literally on their back door, a lot going on. So I do expect to see, more upwardness on this particular chart, right? So EURJPY, and we now have confirmation that for the most part, JPY is chilling as a weak currency. And I think that's going to be the case until October this year, by the way. Right, so this will be the first time price actually needs to get up here. So until then, we're buying, comrades. There's a lot of room to buy, right? On the governing time frame, we have 610 pips to that target, and we're going to get them if we're serious, right? Or if markets allow us, if there's an entry point, right? On the weekly time frame, I'm looking for confluence. This is not a good place right now. I know people just find order blocks. That's not how it works. Not good enough. It hasn't at least met our imbalance rule as 365 traders on the daily time frame. I'm going to go back to the weekly. I'm looking for confluence. I'm looking for something. Yes, man. All right, cool. It's quite a violent parabolic move to the upside, right? Right, so on the daily time frame, this is what we have, and you really need to look at this structure properly. You've got the original buy all the way down here that triggered probably a couple of demands, and there's the demand there. So I want to make it loud, proud, and clear. And I also want to just make sure you guys are following or at least understand all your levels correctly, right? So with a nice, strong, bullish engulfing candle, hold price down, not for the first time, but for the second time, right? Messed this thing up a little bit, but that's fine. We'll fix it as we go. Right, so somewhere there, if you look carefully, you can see, oh, man, come on. There we go. Right, so somewhere there, if you look carefully, you can see a reaction to that. I don't know why it won't allow me to. Right, there we go. So that's what I'm trying to do. And then inside this weekly daily zone where there are two demands, markets are playing between these two zones. So right at the top or just deep inside this zone that I'm bringing to you. Beautiful, right? Clean, perfect. That's all it is. Right, then markets left, exploded up, created a new area-ish, gave us an imbalance. So that area is valid, but it just doesn't have weekly confluence, but it's valid. It's very valid. Gave us another second level, which is very valid as well, and markets are going. Now, if markets were going and I was to do something like this would not be a 365 way to draw a trend line. This is not even a trend line. I'm not drawing a trend line. I'm just trying to see if markets can hang above this area of interest. A trend line requires certain rules, and this is not a correct market-based trend line. Right, I'm gonna go Hakini Hashi just to see it one more time, right? So you can see in here, we've got the volume to sell and then markets explode up. And I just wanna draw a Fibonacci between there and there. Even though right now we don't even have a sign that markets are about to create a new swing, a high, all right? So that's what it looks like, right? So I would wait to see on this chart, or rather I would hunt very far away from price. So for example, if this was to happen, which it might, right? But right now we've got a PCP here, by the way, for the upside. So we need like a big reversal sign first. But if this was to happen, then I'll look out for a play like this, short-term sell, but that's a little bit risky in my opinion, and I don't like selling the opposite. I like waiting for price to get to where I like to wait, right? And this is going to be the first demand to catch price, catch a fall in life, so be very careful. I'll go very light on lot sizes here, and then my main 5% stake would be there because I suspect that's what's going to happen. And if I am right, there might be no need for you to risk money on the first buy, but that's up to you, because if I'm wrong and markets go from the first buy, you might never get another clean chance to buy again, right? So just be mindful of the fact that these two are at play, but in my humble opinion, you know, I would wait there, but I'll only know when I get a swing high, so I can draw a fib. And when I can draw a fib, I can then now slowly but surely start to position where my golden ratio is. Right now, I don't know because I don't have a swing high, if that makes any sense, right? So that's EURJPY done. NZDUSD. Oh man, this is that heartbreak trade. I think, I mean, some of these charts, I feel like I spoke to them on the channel recently, within the last 2 weeks. Remember, there was, you know, market stopped here on the H4 time frame. Let me show you, right? And I didn't take the zone because, you know, it already been hit the first time, and I don't like glass effect, blah, blah, blah. And my rules tell me not to take such trades. That's why I like to lose as little as possible, right? Than risk unnecessarily. And I was going to wait for a higher supply where I put a tick. So I didn't take this. I know some of you did. And so you made money, but I was not in it, right? Ever since then, markets have been exploding. And if I was intraday trading, which I'm not at the moment, because believe it or not, I'm doing 16 hours a day preparing for module 3, or not module 3 now, module 4, right? Module 3 is pretty much done. I need to start uploading it painfully, right? But because of that, I'm not really focused on intraday setups. But if you've done my course, once I give you direction, go break down the charts, man. Go have fun. You are empowered, right? Be confident, take some risks, right? Because all these areas of value, you're looking at the charts, you're hungry, you're looking for money, right? They're all there in front of you, right? So markets come in, clean imbalance. What more could you want, right? What more could you want, right? Markets rotate around. I already told you 2 weeks ago, there's no real demand here. These areas are weak as hell. How weak? Super weak. No, really, Leroy, how weak? Well, we need to almost equalize this low, right? There's nothing to stop you. So, you know, as soon as we break the trend line, like I just showed you in the other chart, you take the trade if there's a supply. Look at it on the daily time frame, for crying out loud, guys. It was a beautiful trade. I basically missed 2 trades on this chart. Now, my excuse is I'm building module 3 and 4 for you guys in the background. What's your guys' excuse? Look at this beauty. So we didn't take the H4 there on the green zone. But then later on, what happened was markets, if you just came back to this chart over time, if you draw the area of competition, markets came back nicely. Just like, this is like module 1 supply demand trading, just like I taught you. Nicely, markets came back. I'm not making this stuff up. This is literally how we taught to trade module 1, module 2. Like we've spoken about this stuff together. You know, for those of you who've done the course, I mean, if you haven't done the course and I don't know who taught you supply and demand, this is still a perfect trade to get, right? So you need to kind of like get organized, trading journal, trading alerts. Don't just wait for Leroy on Sunday, right? My job is to give you overview clarity, but man, this is good money, right? Like this could have put me up at least 1.2, 1.3, 1.4, this past trading week. Now, where is price going? Markets are going to keep falling and falling and falling. That's my humble opinion, but let's take a big step back and see how far they'll fall. Just take a big step back on the governing time frame. Remember, bullish engulfing pattern on the other side of a long-term trend line, Euro USD. Remember, all risk-sensitive assets are going to follow the pattern of Euro USD. Euro USD had a bullish engulf pattern, tested the bullish engulf pattern, then broke it, because all assets have to come back to the March 2020 demand. So this is going down. If you look carefully on the governing time frame, a new governing area of value has been created. I'm going to remove that, didn't take it now. I'm going to remove this, right? What's going on this chart here on the governing time frame? On the governing time frame, markets have now declared a couple of things. Number 1, demand is broken. Number 2, bearish engulfment pattern. Number 3, downward trend to continue. Number 4, a different chart is confirming in its own particular way that NZD is going to be slightly weak against the dollar because the dollar is going to keep going strong. Multiple trade ideas are coming together here. If you can calm your mind and really say, what are you telling me? Right. So there's a lot of sell setups here. There's a ton of sell setups here, you know, that I really think you should be very interested in finding. All right, which will require some type of multiple time frame analysis. Unfortunately, this was the beautiful sale. This is the sale that's actually going to keep going for a very long time. And if you've been with the Academy for a while, please do not be shy. Go back to the Google Drive and really situate yourself and kind of refresh your mind as quickly as possible on module 1 and module 2. It's a lot in there, guys. It's a detailed thing, because when module 3 comes, I promise you, you are going to struggle with the concept. It is not hard, it is new. And the reality is, it is not hard, it is new information, right? Nothing is hard in life, you take it. But those of you, you not only, everyone's got access to the Google Drive, right? It's literally the same thing. Unfortunately, in front of me, I always have, you know, the newer version of it, but sit through the stuff, right? Sit through our course carefully. Those of you who've got access already. And I just want you to look at module 1 and module 2. That's all you can do right now. And really drill in, make sure you understand your different types of supply and demand, your different types of order blocks. This, guys, is your lifeline to trading. You have all of this. Make sure you can write them out and memorize the stuff. This is how you make your money. This is how you make your money. Why wouldn't you want to master how you make your money? Right? Driving school, you have to master it so you don't have to get into a car accident. We took the rules, the K56 rules, the rules of the road seriously. All we do here at 365 is we actually look at the rules of the market. These are all about 2-3 hours long each, so it takes time to master. When you're done with module 1, you jump right back into the course. You take care of module 2, handle your trader's edge. We keep seeing this. You see this here? Bearish. On the monthly, bearish, all this stuff, bearish again. It's here, it's right there. But peak supplies, the different types, all these engulfing patterns, supply and demand number 8, it's all there. Are you guys using your curve tools? This stuff is so important. Module 3 is quick hits. It's quick hit setups, and most of you are busy. Most of you are at school, work, married with kids, and all that kind of stuff. And so module 3 will fine-tune your technical ability, definitely as an intraday trader, but also as a supply and demand swing trader. But the basics are here. All right, the basics are absolutely here. And because it's in front of you, so I want to quickly, you know, to say this is going to be my best work ever. Back to the future is what it's called, crypto trading. It is, I made the announcement in the private group that in the background, believe you me, I'm back testing 10 charts a day on the crypto markets, and I'm gonna let you have all that stuff. And then we're gonna start trading crypto like mad people, right? Mad people. But this time I want to make sure all the information is served up front, right? So this thing is growing, right? Module 3, guys, then breaks down a lot of important, impactful things, right? Week off analysis, trader confluence, the correct way, zero-sum game, all that kind of stuff. It fills up the gaps, but the gaps require you to be ready as a trader with the basics in module 1, module 2. I'm just bringing this up because I'm telling you, I keep seeing amazing setups that I wish I could take. I can't take them because I'm busy sometimes, but I hope you are seeing it. I hope war rooms on Sunday are not your only crush. Bearish engulfing pattern here in June 2021. Markets came back and dropped. A bearish engulfing pattern in November 2021. Markets came back and dropped. Bearish engulfing pattern in April 2022. What do you think is going to happen? Come on, let's make money. Let's make money. But at any point in time, it gets too much. At any point in time, when you're trading and you see the results and they're not making sense, they don't reflect the war room stuff. All you have to do is get a big piece of paper like this and remind yourself what you're doing. When it gets hard, you just repeat these words every day, in every way. I'm getting better and better as a trader. Every day in every way, I'm getting better and better. And because of that, I'm so happy and grateful that money comes to me in increasing freaking quantities on a continuous basis. Most traders talk themselves out of success. It is hard. It is terrible. The broker is after me. Market manipulation. Why would your precious mind even trust your strategy if that's your self-talk? If that's your self-talk, you will produce self-fulfilled prophecies. You will keep making stupid mistakes that you know you didn't sell high. You know you sold low. Of course, you got burnt. You know that was a liquidity rate because it didn't match area of value of rules. Of course, you got burnt. How do I fix these things? Go master the basics. Stop asking me for module 3 and 4. Okay, no one in the entire history of the academy has paid the full course fee. Everyone is always at a discount rate, right? Module 3 and module 4, when they come out, you'll be surprised. If you're already registered, it's for free for you, right? But I'm simply saying, master it. We've got 109 six-figure senior traders who are six-figure senior traders without my module 3 and module 4. They've had more time with me, I can give you that, but I've given you the best version of me now in the course. But if that's not making money for you as yet, it's not you are the problem, just a little bit. I love you. That's why I'm telling you like this stuff, guys. Please, I'm working on my stuff for you. But right now, have you mastered this? Because if you are, you should be in this, right? This is like we do this for fun together on Sundays, but this is clean money, right? So NZDUSD. Before the passion takes over too much and then we lose strength, I'm going to drop to H4 and see what's cooking, right? We want a couple of things to happen here because I really want to jump in, man. This is where I did not take. So this is I did not take this area. I write it in because it's probably not yet in my trading journal yet. And until it's in my trading journal with the picture, and inside my Excel spreadsheet, I want to see it. I want to see the stupid mistake I made so I don't make it again, right? I want to see it, right? So then I'm going to go Kinahashi, just want to see a couple of things, right? So markets came in, we missed that. Markets complicated 365 candles. Markets came into touch, supply and demand number 3, it was a PCP, sorry, supply number 4, complicated 365 candles, and markets left. It is very tricky now to assume that this is going to happen. But let's play devil's advocate. Let's say it does happen. Let's make this very thick, 1, and then let's make it a nice color. And then let's see if it will match an imbalance correction going to retest the latest bearish engulfing candle on the monthly time frame, right? And then if it does match, then we can maybe risk some money there. Right, so you can see NZDUSD on the Kinihashi candlesticks do not give us bearish engulfing patterns. Let's go to normal candlesticks to see what we're looking for. Oh, come on. Oh, bless the Lord, my soul. Right, so according to this white candlestick, remember the white line is literally a retest, right? We said if markets come there, it might be tricky, right? And so I'm going to draw 2 white lines. I hope you guys understand what I'm doing. I'm doing reverse multiple time frame analysis. The first one, I'm going to make it red. It's right at the top of our arrow. We say we want our arrow to match where price is going to almost retest bearish engulfing pattern. What are you talking about, Leroy? Yes, does price retest? Yes, it does. If it's a proper supply and demand, an institutional one, you'll get a bearish engulfing candle, strong buyers coming to retest this, coming to retest this. It happens in front of you all the time. No one is teaching it to you because you want to learn for free all the time. So you don't even want to pay 75% off for a course, but you want to call yourself serious about trading. I don't know. But when I'm done, I promise you, I'll stop breaking the wealth rule. I have literally traded time for money for the last 2 years, which is rule number 1 that proper rich people don't do. If you're serious about finance, you never do that. Time is a limited resource. That's why people charge for services. Right? If I'm putting my time in, and I will start charging this course properly, but I want to finish it. Right, so there's another one, and there's the retest there. There's another one here, and there's the retest there. So of course, there's going to be another retest somewhere here. Of course there is. And now our white line from H4 is telling us that it's somewhere within the range, somewhere between the red horizontal line that we've just put in right there, and also at this base right there, somewhere in here might be a potential supply. So I'm literally connecting an H4 level to a governing time frame. I had a beautiful sell in 2020 on EURJPY from a presidential 3-month chart to an H4 chart. Old school 365 people remember that killer sale. That was beautiful. But Euro USD has always been my friend, right? So there's that red line where we put our white arrow, and there's the other white line there. And it's almost hinting that, you know, you might want to take a risk here. Not that I would, but you might want to, right? So if you look very carefully, there are a couple of things, you know, that we need to consider. I'm going to delete the governing supply, and I'm going to look at H4 zones here. So I'm going to first draw that, and I'm going to see for a fact that markets did come back and retest that zone. So that makes that zone automatically unattractive. Then I'm going to draw the bearish engulfing pattern, and I'm going to see that markets actually came back to retest it. But the bearish engulfing pattern is a different type of supply and demand. And so I'm going to allow for a potential retest, you know, and see if that potential retest is going to work out for me in the future. And this is what I like about it, right? So it's worth some type of money. It's worth some type of money. It's too thick now for me. It's worth some type of money. I would like to see how markets, you know, handle this area here. I would be willing to take a risk, even though, folks, our beta sales have gone. And then somewhere along the way, before we take these type of trades, we must confirm with our Fibonacci when it does happen, where the golden ratio is, because if this is a swing low moment, then we won't even get up there. When markets are in a big rush to fall, that might be as far as price can go. All right. And the last thing you want to be aware of, even though I'm spending so much time on this chart, is the red zone. How big is the red zone? And what does it represent? Right, it represents, you know, what used to be an uptrend, which is now pretty much falling. Right. So you really don't want anything to do with this demand all the way down there. So what would be nice on the daily time frame for NZDUSD is to first drop, clean this area out, break it, and then come back into that H4 area, and then we start to sell. All right, I hope that made sense. Clean this area out first, break it, come back up here to sell. 365 traders have done the course. There'll be an imbalance here that will be created, enough for us to then operate on this zone. That's NZDUSD. Looking forward to this trade in the next 2 weeks, because markets are telling me they want to fall. Pound CAD, long time. How you doing? Right. Still playing mind games. I want to sell up there, Pound CAD. I won't waste your time. Giving a big hooah, and even up there now is just a dream. So let's bring this down here. Even all the way up there is now just a dream. So let's go back to daily. Let's see if I can change my mind. Right, so this is the new zone I just drew based on weekly confluence. I'm going to delete this area, and then I'm going to delete these arrows, and then I'm going to tighten this zone. I'm willing to risk a little bit of money here. I'm saying a little bit because there is a higher sell. So this is the entire sell zone, to be honest with you. Markets could go in here and tag you there. So dealer's choice, you could just wait here. You could just wait there. You could have a very, very small lot size, or at least a lot size that's small enough to account for both these areas of value. That's number one, right? So that's how I'm going to play it. I'm going to have 2 or 3 entries. I'm going to have a smaller lot size as according to my account, with the stop loss all the way out there. Then I'm going to have a second entry right here with a nice big lot size. Big by me, remember, means risk management big. So the maximum that I can afford to put in, 5%, 3%, depending on the account. So I'll have 2 sales there. 1 sale here, 2 sales there. The second sell, stop loss also there. So the second sell is a slightly bigger lot size because it's the closest to the stop loss. That's how I'm going to play this. But let's see if it's smart even to be shooting down this low on the curve. What has us thinking that this thing is going to go down, down, down? How long ago was this? 2015. Going down ever since. Yeah, so we do have a sell profile asset, and we do have CADs, pound CAD. CAD is a bit strong because of oil, because of the war. So if that continues, then yeah, sure, this will go down, right? So that's the trade idea. Again, on the daily, so you can see it clearly. I apologize. One big sell trade for me, you do what you want for me here, and stop loss there, and then a second sell trade, entry point there, stop loss there with the necessary adjustments, right? So that's pound CAD. Pound NZD. Don't you just love these cowboy areas? Look at this. There's a cowboy area drawn. I clearly told you, bad idea to sell. Markets broke through. Stop loss were hit here if you took it. Right. So, now clearly it's now time to see this level is going to hold, which is the level we've been waiting for. I don't think I'm going to change my mind on anything here, but I just want to see what the governor is doing. Pound NZD is indeed, as far as I know, a sell profile asset. Market stepped into the plate here, 2016, and got back in. And so this is one of those assets that fall when things are bad. So in March 2020, when other risk assets were going up, pound NZD, March 2020 was going back down. Markets came back to that area of contracted supply. Markets are going back down. And there's a big mess here as to where or how low the sell will stop. Very big mess here that I don't like. Right, but for the most part, I think I'm going to maintain a bearish stance. There we go. Right, see, this is a clean chart. This is kind of like the setup you want when you're drawing a Fibonacci. If you haven't watched any of my public lectures on use of tools for supply and demand, the anti-fib requires a swing high, swing low on the latest leg. Swing high, swing low on the latest leg for bearish, and then for bullish is the opposite, right? You draw it from down to up, right? For bearish, you draw it from top to bottom. Right, so we've got a nice clean structure for a nice bearish Fibonacci. Just to double confirm our bias, you can see the sell is lodged inside that retail trader level and the beginning of smart money. Right, the 50% and the 0.618, right? I don't know why my fib is so way up there, right there. So definitely, I personally will be definitely risking a little bit of money here, and we shall see how that goes. If this fails to work, then, there's a big climb up all the way to this zone here. But we'll cross that bridge when we get there. Right now, I want to sell here, right? That cowboy level punished whoever took it, right? Risky trades never pay. No, they do pay sometimes, actually. Let me not lie, they do pay. Right, Palladium, XPDUSD, a very powerful mineral that does extremely well. Palladium pays very well. But Palladium moves and runs very well when gold is moving. So when gold is very bullish, Palladium will run a lot. When gold is very bullish, Palladium will run a lot, right? So we've got some levels. And the reason why I'm bringing Palladium up is because I have an alert here. So how my alerts are always 30 to 40 pips just before an actual buy zone. And you can see on the daily time frame, the best place to buy will be somewhere here, all right? So that's why this area is drawn like this. Number one, to mark the breakup structure, but it's also in line with something in the weekly. There we go. So on the weekly time frame, we had a very strong bullish engulfing pattern. I'm going to remove this. So I'm bringing this up now because I actually want to trade Palladium. Palladium she's violent when she sells. Oh, when she sells, she removes. She removes. Weeks of buying can be removed in 3 big candles. I mean, look at this. Look at this. This is a weekly time frame. This is from the end of July up until February the following year. So about what? Almost 8 months was removed by 3 months of selling. Just like that. And that's just the nature of Palladium. 1, 2, 3, 4, 5, 6, 7, 8, 9 months of buying, removed by 1 candlestick of selling. But still respecting supply and demand, right? So perfect areas, and then markets have come in here, right? So it actually looks like my alert was a waste of my time because markets have left. It looks to me markets have left. I mean, they could try and do a market fill here of market inefficiencies, but I don't see it happening. Oh my goodness. I literally had this mapped out here because I wanted to specifically buy into Palladium. Right, well, life is tough like that. Let's do this. If we get lucky, then I'm looking for something right there in Palladium. I don't think we're going to get lucky, but if we do, I'm going to leave a pending order there in Palladium. Let's just see what normal candlesticks look like. So it's got this terrible habit of actually, I need to read back, I need to find my notes of my old back test in Palladium, then I need to come back to it. So there's a habit of just turning just before the areas of value. So it never lands on top, it seems, right? Just at the top there. It's almost like there's just so much competition, but this one is terrible. Like I would have never bought here. I don't know. I'm not a support and resistance trader. So I would have never assumed there's a resistance there and market said, but it did here. It definitely did. So I want to actually back test it on the daily H4, H1 and actually see how many times it does that in relation to I'm genuinely tracking our order books. And if you don't mind me writing that down, that would be great. So that I don't forget to do a back test. I do a lot of back tests. I just don't publish them. I don't know how many people will be interested in that kind of stuff. But also back tests will be done on the course side. You saw there with the crypto stuff. Because then when you back test stuff, you actually have to teach or really apply the strategy, right? So I think all my back tests should generally be for students, you know, who are committed to the learning process. Right, so in terms of Palladium, if we're to really just break it down where it is right now, markets fell terribly, gold is falling, all right? Markets are temporarily being stalled by what could be potentially a supply level-ish, right? You got a consolidation and you got a drop and then you got a weird midterm fall. All right, there. Now let's just assume this is still a bullish market. If it's a bullish market, we'll draw the Fibonacci this way. Right, and then we'll be like, oh, okay, look, this makes sense. Why? Markets are retracing in the Fibonacci golden ratio, right? 0.18, right? So that's what's going on. And if that's the case, then, you know, markets are well within their right to do that, to do what they're doing. But I don't know what's going to happen. It's very hard to kind of like, until I back test this thing, but I'm going to have a pending order down there and I'm going to hope for this. That's what I can, that's all I can do. I'm going to hope for that. I'm going to hope that this consolidation, you know, doesn't handle, you know, itself well. I'm hoping that the supply doesn't get broken, because if it doesn't get broken, that's a lot of good sell side pressure, which is what I want. I want people to sell, to come to me. But I must be honest with you, be very mindful of the fact that where I want to buy does not account. Actually, I might as well just use a smaller lot size and just make sure it does. Because there's a lower demand here, colleagues, just right there, right here. This is a problem. So you don't want to ignore that. And markets seemingly came to sit here and then exploded up. So I'm almost sure that we don't need it. So if you've got a small account, right, then this is all you're willing to lose. That's fine. But if you can handle just slightly a wider stop, that would be much better for you, right? So that's Palladium, done and dusted. Bitcoin, is it gone to the moon? You people were laughing at me. You people who were laughing at me, telling me I'm crazy, telling me that I don't understand this thing, telling me that I'm a crypto hater. I am literally more crypto bullish than I've ever been in my life. Not in trading, just in investing. I am buying so much more. I am starting my own crypto projects, which will, I love crypto, but loving crypto does not allow me to be irresponsible enough to sell people a dream. I know I have a small channel. I know, I get that. No one really cares. That's fine. But the few people who are listening come and we appreciate their reasoning and why they come. And I need to do a good service to those people by being honest. I told you guys, this moon thing, this moon nonsense is terrible. What you want to do as a crypto fan, guys, ladies and gentlemen, I don't know, is whenever this thing is going down, you really want to spend most of your money buying it. Which means if you're not yet, maybe it's been six-figure, a trader is easier now in trading, I don't know. But if you're not yet rich, however you define rich, if you're not yet wealthy, if you are rich, trying to become wealthy, but you have a family, you have kids. If you don't have kids, but you are old enough to be working and not yet old enough to be retired, all of you, that whole group of people I've just described, and if you're a reasonable, rational human being, you don't need kids, just be reasonable, rational, you want Bitcoin to drop. This is the last drops we're starting to see. And I hope they last the whole year. 6 days from now, within 3 years program, I'm not skipping the month of May. There's going to be another financial note. I'm going to buy in more stuff. We're going to dollar cost average into the October tokens, dollar cost average into the April, and I'm giving you more beautiful crypto gems. Buy those babies at 10 cents, $1, whatever they are. Buy them low, buy them now. We buy during bear, we hold during bulls. We don't buy during bulls and sell in bears. It's not financial advice. I want to say it's common sense. Do what you want with your money. This is for education purposes only. Trading comes with a substantial amount of risk. Trade what you're willing to lose. Blah, 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 blah. Don't come for me. My lawyers are really well prepared. I've given you the disclaimer. What I'm trying to tell you is, why would you want this thing to go to the moon? If you want Bitcoin to go to the moon right now, it means you have a financial need and you're not trusting your subconscious mind to solve it. And so you think the only way to solve it is to pump crypto. It's not going to happen. You're going to create a deeper financial need in your life. Let Bitcoin chill and drop. Let's wait for it to drop. Now, I'll tell you something. Tell me something, baby. This is part of the video I want to do tomorrow. It's to do with the stock market, but who cares, right? It's the same thing. You know, Bitcoin and equities markets are very coupled. I'll say this many times. 2020, it's fine, 2020 March of Bitcoin. Where are you? Oh yeah, of course, where I told you it would be, all the way down there. 2020 of March, Bitcoin. You see this here, guys, comrades. Those who are paying it, those who care about money. You see this here? You see this value base into, I begged the whole world 2 years ago. I bought it doesn't matter what I bought, never mind. This is not a lifestyle trading channel, but this was big. Bitcoin was $4,000 2 years ago. Now, what was happening in March? And again, please watch tomorrow's video because market conditions, I don't know what I'm going to title that video. I'm going to call it market conditions. I don't know, but there'll be a video on the channel tomorrow. You need to watch it. You need to really understand what's about to happen. What's about to happen is going to help you understand finances for the next 2 years, which is going to help your trading and your investing, which is going to make you a lot of money in the next 2 to 3 years if you're really focused and you get working right now. You don't have to have a lot of money. You just have to have the will, the understanding to start with your $5. But in 2020, QE started because of COVID. Quantitative easing, monetary policy loosening, money was pumped into the markets. We saw equities. What's happening now, colleagues? You see, look at Bitcoin from 4,000, 5,000, 6,000, 10,000, 12,000, 20,000, all the way till December 2021, when the Fed spoke about tapering, which I've covered in this channel. So let's find December 2021. That's May. Oh my goodness, you guys, this channel is so small, and I love that right now because all the good stuff is coming out now. So thank you for those of you who are early subscribers on this long journey. Right, look at this. So now in November, December, when we had what? Tapering. What did tapering mean? We're going to start tightening the monetary policy. We're going to start looking at reducing QE, and we're going to start increasing interest rates. What happened to Bitcoin? All right, peace out, I'm out. Stock market look like this. Cryptos look like this. I'm saying in a week from now, we're going to be together live on the channel. Powell is going to stand up and potentially rug pull the market. I hope Bitcoin crashes. I hope so. I hope that whatever the markets have priced in, that Powell comes in and does more damage to Bitcoin. And I love Bitcoin. I own Bitcoin. I mine my Bitcoin. I love my Bitcoin. Bitcoin is important to my financial ecosystem long term. I own a lot of different types of crypto. I bought crypto for my kids. It's a big thing. My pension fund is built around my crypto portfolio. My parents' pension fund, I love, but I want this thing to crash. We need to there's so much money waiting to jump into crypto, guys. Trillions of US dollars of companies wanting exposure to hedge, all right? And they only will start getting interested if this baby crashes. So we've got 30,000. I hope we get that. I hope everybody buys with their little retail trading accounts and they don't listen and they hope they get rug pulled and we come down here to 20,000, right? Because then, for personal reasons, it's an exciting day, but be very careful with this thing, right? So markets, sorry, because I took so much time, I have to move on. Markets have nothing here. I have nothing to do on Bitcoin. If you're asking me, I feel stupid. Once again, I did it again. I sold up here and I told you guys I'm taking profits here, but I'm not gonna buy at this area. I announced this, but now I feel stupid for closing that buy. Now, I was busy, but what's your excuse? I was busy. Why didn't you sell here? I was busy building module 3 and 4 for you. Why didn't you sell there? Why? Because you think it's supposed to go up all the time. No. Guys, look at the charts. Right, so now it's too late. There's nothing to do. We want to see the glass effect happen. We want this area taken out. We want this trend line, tested. If markets do get here and find some type of support, retail traders, buyers, blah, 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 then you want to see how it's going to react to the zone. If this breaks, then yeah, we can then go back to retesting those areas. But I don't see that likely to happen. You also want to see what the FOMC is going to say next week. Okay, so be very careful here on this zone. But yeah, I really don't mind this being a nice flex structure to the downside. Right, I've been very bearish on Bitcoin. My supply and demands have not failed me on Bitcoin. They never do in general. So I'm very, very happy, that Bitcoin price is going down and I'm dollar cost averaging, right? Don't care about the price. Buy Bitcoin, buy $10 today, buy 15 tomorrow, buy 20. Then join, guys. The Wealth in 3 Years program is $50 US for the whole year. That makes it $4 per month of brilliant crypto calls, if I do say so myself, for education purposes, not financial advice. Okay, and it's $50, but that expires on the 30th of April in 6 days' time. So the full course, instead of it being $400 US is 100, and the investors' financial notes, instead of them being 120, are currently $60, right? So literally, you can get everything in the academy for 120 US dollars versus 520. That's wild. That's wild, right? But it's up to you, man. Some people, like retail traders, like to learn painfully. Like you want to lose thousands of dollars first in the market, and then for some reason, if you don't give up in trading, then you want to come back to do the courses and you find them worth $600, $700 US and you want to complain when there were $100 US in front of you all the time. Right, so this is what Ethereum looks like. Ethereum reacted there. All right, so this was, at least I was smart enough to buy ETH, and then I got out here on the 4th of April, made a little bit of money. You can remove that now. It was a very good trade. Couldn't be happier with that. And then ever since then, I was hoping that markets would actually come into the supply, but they didn't. So when price started to reverse against me, I closed the trade. I'm not in Ethereum right now, but I would wait for some action all the way down here. Now, don't blindly copy what we're doing on the Bitcoin chart, because remember, the Bitcoin levels don't hold, right? I don't expect this to hold. So I'm going to make this red. So if these levels don't hold, then buying down here is a short-term buy to the next supply, right? But this is big. Why Ethereum? Ethereum has cleaner levels than Bitcoin. If you really study this chart, but cleaner levels than Bitcoin. So just be mindful of that. You'll notice my charts don't have a lot of nonsense. Break of this, Just keep it simple. Keep your supply and demand trading simple. You're not controlling the market by over analyzing it, right? You're simply trying to make sense of where price is going and you want to trade accordingly, right? So because we're looking at palladium and gold, I definitely want to come back to copper. Copper was a good money maker for me, but we had to get out of copper. I told you guys I was a take profit zone there as soon as markets got in. I took profit. It was a beautiful buy all the way down here. And now I had to move on. It's time to move on from copper, right? So move on from that old history. So markets turned up there. All of this I no longer need. And now I really want to get back into copper. I was hoping by now copper would have fallen decently. What's annoying about copper is the fact that when it builds momentum, it consolidates a lot. This is annoying. This is annoying. This is annoying. Right, and there's multiple tests to do of competence, right? This hated this, right? But we cover all of this in module 3, how to count it and how to anticipate it, etc. Right, so for copper, again, I'm not really excited to sell. I understand why you'd want to sell. The problem with copper, guys, is be careful. It's at an all-time high. It's like gold. Whenever gold gets to an all-time high, you stop making trade calls. You stop going to whatever. Once an asset in general does an all-time high, it's any day from that day is breathing day, because once it goes all-time high, media goes crazy. Gold hits 2,000, better than 2,000, and then everybody's an expect now. When times are better, buy gold. The whole market floods into buying gold, and gold always sells against those people. So when an asset goes to all-time high, you don't have a supply. Supply number one, if you've got the course, go back. Major turning points are supply and demand number one, and they're done on a specific time frame, and they're an area of value until an imbalance supports them and creates a supply or a demand. So when an asset gets to an all-time high, you just have a turning point, a major turning point sometimes. But what you need to do is to discover if there are any areas of values giving you a supply. A major turning point is not equal to a supply. A supply is absolutely always and almost all the time equal to a major turning point, and the two are not the same. So you need to have those rules in place. Now, because of that, those are the main reasons why I got out. So like, okay, fine, I don't know where I'm going. I am not Moses, right? I don't know everything in the markets, and I don't want to. My head would explode. So I always do what markets are telling me banks are doing. Because they haven't created a target, I have to get out. And I'm glad I did, because if you look later, that was then markets then just sold against me. They would have just sold brutally against me after that major turning point there, and starting to realize this stuff. So what do I see? Well, I see a problem in terms of buying. All these lower levels here are beaten, they're tested, they really are quite exhausted, and I don't like trading, such things. You'll have an area here that have been retested there, and that little area there was tested here, and then this area there was tested there. I don't know what to do. I honestly don't know what to do with copper. I don't even know why I brought us here. Maybe it's because when I was thinking about copper yesterday, I then thought maybe under pressure of being on YouTube, an idea would come. I just know I love copper. I love buying copper. I love trading copper. Copper has made me a lot of money. I thought maybe, this would help, right? So yeah, I mean, you could want to try for some sells here. Not my cup of tea. But copper, unfortunately, I'm going to have to remove it from my watch list, because it's going to drive me mad if it waits there. I need to either see copper go down and take out a demand, or go up and take out a supply and create a new all-time high, and then come back down to a new level of demand, and then I have to catch it there. Sorry for that, but yeah, let's move on for copper. Copper is a no trade for me for a very long time, until markets decide on what they want to do. Man, Mr. Evans posted some USDCAD trades. Goodness gracious, Evans is an amazing, sweet gentleman who's probably very over me, because then I struggle to keep up with messages, and I missed some of his messages and all that kind of stuff. And Evans, was saying, I was just happy to see your analysis, Mr. Evans. I don't even know if you still come for the war rooms, but this is what Mr. Evans posted on our public group this morning. And I'm so, when I see students work, right? So he's got a long-term bias on USDCAD weekly. And Mr. Evans, I'm doing this because I agree with your chart. You see, you wrote the buy potential opportunity, you put all the TPs and all that kind of stuff. Just brilliant, man. I love your work, sir. I agree with your charts, and he gave us a stop loss, right? Well done, sir. Right, so full disclaimer, I'm already in a buy for USDCAD. So I'm going to continue holding this buy, and I think Mr. Evans is right on this front. USDCAD buy is, I'll post a couple of the trades that I'm in tomorrow, or at least this week, right? So you guys see some of my active swings and all that kind of stuff. Right, so USDCAD, we bought here, why I bought down here, right? And Mr. Evans is saying, look, man, there's still a lot of room to the upside, and I do agree with that. Once again, remember, dollar is quite strong. FOMC is coming to make the dollar a little bit stronger a week from now. Look at when this rise happened, right? The first time the rise happened, FOMC meeting, 16 June. markets went crazy. And then there's another one here on the October, markets bounced. And then, you know, sometime in March 16, markets resuscitated, right? It's a big deal, right? My FOMC loves saving the dollar. They want their dollar, right? Okay, maybe this one wasn't a good one, but markets are now returning back to this level. That's going to be interesting, right? This FOMC level here recently in March, right? So that's kind of like currently my target, way to take profit just above, but I might want to take a TP there and then join everyone else with Mr. Evans' trade calls and re-enter, you know, the buy markets from that perspective. That's what I'm looking at doing for USDCAD. But for the most part, you know, I do agree with this bullish bias. I think we might be entering slightly different places. Granted, number one, I'm already in. But number two, oh, didn't we cover this already? I wrote USDCAD twice. Okay, I apologize. We covered this earlier on. So I've told you guys about USDCAD, right? That I'm already in and blah, 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 broke even, da, da, da. Yeah, so I'm hoping to take a trade there. And this for me is high risk. And then there's the Evans approach there as well, very similar trade ideas-ish. And we're going up. So yeah, USDCAD is already covered. Sorry, getting old. Right, Platinum. This is the second last trade, ladies and gentlemen. I appreciate you if you're still watching. If you're still watching on Platinum, just please write down on the comment. Please do it so I know I'm still watching at Platinum. Then I'll know, you know, this was beautiful. Guys, Platinum was so painful. I was inside Platinum and then got kicked out, you know, not by my will, but, you know, we did a little bit of profit trading, sorry, right? So we bought all the way down here in December, bought there as well, and then just somewhere out here, markets all of a sudden started to turn some margin, and I got stopped out. And yeah, man. So that's why I'm looking at this chart again. I want to see if it is possible to make a little bit more money. I didn't sell, unfortunately, because at that time when I was trail stopping, number one, I just felt like markets had been running for long. Number two, gold was extremely volatile at that time because of the war, right? And number three, because of that particular war, on and off, negotiations on and off. Markets are moving from risk on, risk off, risk on, risk off. So gold was going up and down, up and down, up and down, 1933 to 1979, 1933 to 1979. You check those levels on the charts, right? And so platinum, palladium, and all those things were dancing along, you know, with the rhythm, right? But now, you know, it's quite clear as day. I don't want to buy here again, all right? I don't, and the reason for that is, you know, this is not really the way my rules work, all right? Now, price has not fully violated this area of value, all right? Price has not fully violated this area of value. In fact, I got it on a fresh touch, so I got in lucky. So I am going to, despite my judgment, I am going to buy again here out of nostalgia, but I'm going to write high risk, right? And that means I don't trust this zone fully. So unfortunately, I won't be able to go a standard lot size or whatever lot size I use for this type of commodities, because I at the bottom of my heart, I find it quite risky, all right? I find it quite risky. Now it's gonna quickly do a reverse multiple time from analysis, see how far we are from the all-time highs. Yeah, we're not even close, right? There's a lot of room to go up. There's a lot of room to go up, right? So don't give up on platinum as a long-term buy. Platinum is a long-term buy to like something like 1,000. There we go. I have it right here. This is the target for platinum for smart money. How do I know this? Did a lot of research, right? This is the valued price for platinum that people would want to see. Just like how we know gold is 2.4, 2.5, right? So it's going to get there. Right, but right now we're dealing with some crazy forces, man. On the weekly time frame, we've got a bearish engulfing pattern, right? That's not a good sign, right? This is not a good sign. Just outside this demand. Once again, this demand, guys, is looking dodge. All right, so just be mindful, right? That you might get some short-term buys, and then markets reverse against you, right? So platinum is it was a good trade, made significantly, you know, really great money. But my heart was wanting to actually take this trade all the way up, right? I didn't think after breaking a bearish trend line, coming all the way down, I didn't think we're going to get a full market reversal back down. I thought retracements are good and all that kind of stuff. If I felt this was going to happen, believe you me, I wouldn't have even broken even. Like I can hold without sweating. Like I literally don't mind being a swing to positional trade. I love that stuff, but I just didn't see this happening at the time, right? So that's what I'm thinking. Platinum, high risk buy all the way down there. Protect yourself before you break yourself, right? Gold. There's nothing to say about gold. This area won't hold. Consolidation went up. I told you this. Then I said it's going to stop right there. I told you that. And then came back down. I told you that. I don't care. Honestly, I want gold to fall, and then I can start buying like a crazy person down there. That's what I want. I want gold to fall, then I can start buying there, right? So that's gold on the daily time frame. I want gold to come all the way down here. I don't care about what it's doing up there. All right, so the last chart for the day, ladies and gentlemen, is USDZAR, which leaves me about 30 minutes to render this video, upload it onto YouTube, and have it to you by 4:30. And if you're still around, I appreciate you. USDZAR, obvious, dollar strong, anything ZAR strong. And I see semi-supply areas were removed. I marked them in orange, and then there's the real supply all the way up there. But let's just kind of like take a deeper look at price. Okay, so USDZAR is trying to make its way back to its all-time highs. Let's remove the brush. Right, so this is where you see the strength of the dollar against exotic pairs, like emerging market currencies like South Africa. Now, I've done 2 videos today, and I can actually feel my throat starting to give up. Yeah. Right. So yeah. Yep. Don't sell. You're looking for buy setups, USDZAR. And right now, the only safe one is all the way down there. All right. The only safe one right now is all the way down there. If you don't believe me, you can rush to buy and pay the price later. There's nothing to buy right now. Until markets give us a sweet high, sweet low. Then maybe we can start to look for retracement levels here on an H4 time frame with an order block. There you go, just like that, right? But that's not an exact location. I'm simply saying when markets give us the indication to do that, we will. Ladies and gentlemen, that is the end of Traders War Room number 64. I hope you enjoyed it. Please, if you're still watching, like the video, like the video, like the video. Please like the video, like the video, like the video, subscribe. And I'll see you tomorrow. Tomorrow, we're going to talk about market conditions, what to look out for, recession, power, interest rate, next week, dollar. And now everything can change based on the stuff that I'm collecting. But once again, shake my hand. Love you guys to bits. All the best with your trading. I'll see you on Saturday to review any trades that got triggered this week, any wins and losses. Transparency is our thing. Real market education is our thing. 6 days for the course discount to finish, for Wealth in 3 Years program to finish, and we go back to our usual pricing. I appreciate you. The links are down below, so make use of them. Shake my hand. Peace. Have a beautiful day and week, guys. Cheers.